Alrighty, folks, are we going to have that classic end of year rally? You know, the one that starts after the election that we have seen and heard about for a long time. Are we seeing the current rotation out of big tech into small caps? But I don't know what's going on. So what do? I listen to the man, myth, the legend, Mr. Dan Bird. How you doing, buddy?
I'm doing great. You should join my YouTube
I
channel.
I have. I think I was subscriber number 4 or something. Come on
Oh,
now.
okay.
Come
Good.
on. I got to show support and
You're
love for
you're
the
the one that
family.
pushed me to do it, so I'm
That's right. That's right.
I'm I'm doing it.
I'm so glad that you have finally done it. Of course, we will show that in a minute. But yeah, let's talk about the end of year rally. I've been following you for a long time. We've been boys for decades. The end of year rally is something that we typically count on, certainly post elections, presidential elections. Are we seeing that right now? Are we seeing a rotation out of the big seven, big tech into small caps? What's going on?
I think so. I think it started this week actually,
Hmm.
and historically Tuesday is the start of the small cap rally.
So next
Historically,
Tuesday, the one in two
historically, I
days.
think it's actually already started this week. But yeah,
Okay.
next Tuesday, historically,
Historically, got it,
from Tuesday before Thanksgiving until middle of January.
is the rally. Okay.
Usually the small cap rally, and they usually outperform big cap, big tech,
Okay.
or big
All right.
large cap. Let's call it
Yeah.
S&P 500.
Okay. So
So
as always, I'm sure you have charts and data to show us to back this up. So make sure you show
absolutely,
your YouTube channel and website. But yeah, let's look at the data.
I will do that. And I think we're just going to do one video today
Works for me.
because I don't really have a second topic. So
There you go. Well, right now I'm just looking at your Zoom screen, just so you know.
how's
There we
that?
go. Perfect.
So
Oh,
I
look
do
at
have a
you with a Black Friday sale.
Black Friday sale, $24 off. Anybody that wants to join, instead of 99, which is really cheap anyway, it's 75 for a year.
Oh, look at you.
And it's for new subscribers only, unfortunately. So I spent hours on the phone with my website provider because I wanted current subscribers to take advantage of it. But
Hmm.
there is no way to extend a current subscription,
Oh,
believe it or not.
ah,
I couldn't believe it.
yeah,
In fact, the support person that I talked to couldn't believe it either. They had to go to development.
it's okay.
But unfortunately, there's not. So it's only for new subscribers.
That's okay.
Yeah, just go to breakpointtrading.net website. Just click on this. It will take you to a sign up screen. And right where it says in the middle on the right hand side, enter a coupon code.
Yep.
Just type in Rally, Rally,
There you go. Okay.
Rally, just like that.
Sounds good.
All right. And that's right here. Promo code, coupon, same thing.
Hmm.
It's at Rally.
Okay.
And you can take advantage of that. So this is the website. Here's the YouTube channel. Anyone that's interested, just go to this breakpointtrading.net. Right in the upper right-hand corner is the YouTube, and the free newsletter is right here. I publish every weekend. So you just click on that and get the newsletter. So first of all, this market bias is something that I created that tracks pretty much everything in the market. Sectors, indexes, sectors, industries, metals, currencies, relationships, everything. And this just rolls it all up and gives a summary. So it actually has been pretty accurate in identifying market turns. This is the election right here. Let me turn my little thing on. So that's the election. Right now, we're just going sideways. We go up one day, down one day, up one day, down one day, just going sideways. But I think the market is poised to go higher for the end of the year. So if we look at the S&P right here, there's the breakout after the election, pull back right to support and the 21-day moving average, which is reversion to the mean. And now you can see it's starting to head higher again.
Mm-hmm.
Hasn't gone back up to 6,008, I think was the high. Yeah, it hasn't quite got back to that, but I think it's going to.
Okay.
And then the NASDAQ looks similar, just above support, right above the 21 day, went down into this gap area, but then reversed. So I think that one is looking the same. How about Bitcoin?
Yeah.
Couldn't quite hit 100,000. Didn't
Yep.
quite get there.
Nope. Yep.
And it got to 99. I think it was 99. I'll tell you what it was.
Yeah, it was 90. Yeah, it was 99,850, I think.
99,773, basically.
Okay.
That was the high.
Okay.
So almost 100. And now it's pulling back. It pulled back.
Well, you know what happened, right? Do you know what happened?
No.
As always, Mr. Jim Cramer came out and said, I don't know about you, but I own Bitcoin. And that was the top, and it's just been crashing ever since. The Jim Cramer effect in full force, folks.
Yep. It's fade Cramer. You have to fade Cramer.
Of course, I'm teasing, but yes, that was said that day that it peaked. Jim Cramer did his thing.
Of course. So it came down like $1,700 on Friday. Let's see what it opened at. Open at 97.7, close at 96.1. It was actually down to 95.7. So $2,000 it traveled on Friday. Now, you might think that's a lot. 2,000, that's a lot. But on $100,000, it's not that much.
No.
And if we look at it on this chart, it's barely a blip, right?
Yeah.
And
I mean, just look at the run in a month. Yeah. I mean,
exactly. Look at the run in a month. Look at where the 21 is. That's reversion to the mean. So a normal pullback would be back to this consolidation area right here, back to the 21. That will be a normal pullback.
Right.
Of course, that would be $10,000.
Yep.
But still, that would be normal. Now, if we look at it closer up, this doesn't look so bad, right?
Mm-hmm. No.
This is a daily chart. That hasn't even given back this 1 day gain from last Tuesday. Yeah. Hasn't even given that back. So I wouldn't worry too much. I think it's going to still hit 100,000.
Yeah.
Still going to make it.
The question is, will it hit 100,000 by Thanksgiving?
Well, that's I doubt it. That's 3 days away. You know, look at the momentum. In fact, this is a very good teaching moment right here.
There you go. I love teaching.
Here's that's heading down.
So what is that? What is that chart? What is
that? That is momentum.
So momentum is weakening.
Momentum is weakening.
Okay.
At the same time, the price is going up.
Got it.
Price is going up.
So less and less buyers.
Not necessarily.
Oh, okay.
Not necessarily fewer buyers, and probably it's fewer buyers. I mean, the actual line up here is actually still strong, but this is just the magnitude of the trend. So the buyers aren't buying as many shares. Put it that way. But this is a negative divergence, and this a lot of times will preview a decline.
Okay. So reversion to the mean. To your earlier graph, we could see $10,000.
So reversion to the mean right here would be 88,000, and we're at 96. So
okay, very cool.
That would be a normal pullback right there.
All right.
Everything else, accumulation distribution is just looking really strong, pulling back a little bit, but that's to be expected. Long-term momentum is pulling back a little bit, but I mean nothing really is alarming.
So not a horrible chart.
Just not at all. It's a great looking chart. It's just a normal pullback.
Yeah.
In fact,
all right.
I would expect a pullback probably to right here.
So about 90 grand.
About 90,000. Yeah, 90 grand. So the 21 day is trending up and moving up. So it will continue to move up even if this comes down because it's lagging. It's a lagging indicator. Mm-hmm. So that will come up and meet this line right here, and this will come down. And I think 90 is probably where support will be.
You heard it here, folks. Here first, folks. Bitcoin going to 90 grand. Nothing crazy, nothing scary, just a normal pullback.
So far.
Yep.
So that brings us to, let me let me talk about the end of year rally. And first thing I want to do is, since you're wearing a hat, I noticed
Ah,
I have my hat.
all right. I can't quite
I know you
see it.
can't, I know you can't see it, but I'm going to show it to you
Oh, okay.
on this right here.
It's not a Ponzi scheme.
It's not
Is
a
that what
Ponzi
your hat
scheme.
said?
It's a BTFD scheme.
Ah, ah, okay.
So buy the frickin' dip scheme.
Oh, that's hilarious.
That's what
Okay.
my hat says.
Buy the dip.
BTFD scheme. Yeah,
BTFD.
it's this image right here on my hat.
It's awesome.
So I actually showed this. I think it was the very first slide I ever showed on our very first
Hmm.
show
I
3 years
remember it.
ago.
Yeah.
And at the time, the market was getting ready to roll over. It was
Okay.
in December of 21, just before
I
the
bet.
2022 bear market.
Yep.
And I showed this image. So I created a hat that looks like this. It's a BTFD scheme. So let's look at what Stock Traders Almanac says. This is November.
Mhm.
And you can see, and this goes back to 1950. So you can see where we are right here. Oops, can't click on it. So we're right here.
Yeah.
This is last week. The rally began right on cue, just about exactly here, Thursday and Friday.
Hmm.
Market started moving up. We're right here, and it should continue to move up.
Okay.
And this will go right into the end of the year. Now, this does not mean this will happen. This is not a prediction.
No, just
This is just
historical fact.
75 years worth of data.
Hmm.
All right. That's
Okay.
what normally happens at the end of the year. And Thanksgiving is usually the week that things start.
All right.
This is election years, and you can see we are far outperforming the historical norm.
Yeah.
This goes back to
Yeah, we are.
1949.
And those are percentages. Yeah. Percent change. Yep.
That's right. Percent
Okay.
change. And so the black one is the all election years. The blue one is the Stock Traders Almanac aggregate. The green one is sitting president line, and the red one is election years that were in the top of Q1. So we had a massive Q1 this year. So
Right.
we were like the third biggest Q1 of all election years this year.
Mm. Okay.
And so that's why he put this red line in. The sitting president, the green line, I showed this previously when Biden was still in the race.
Hmm.
And this was the sitting president line. And it said if there was a mixed field, then it was way down here.
Right.
So his thesis, his hypothesis is that since Trump was president once,
Hmm.
that he is kind of like a sitting president.
Oh, well, that's a nice, convenient twist. Okay. All right.
Yeah. So anyway, but look where we are. We're like way, way above all of
Yeah,
that.
we're orders of magnitude higher.
Yeah. But you can see December in all of these lines. December
Okay.
is up. You can see right there where we just started in November. We haven't taken out that high yet, but we're getting close to it.
It's going to be interesting because we have something coming up Wednesday that we're going to talk about. You tell me when we're ready.
Yeah. Let me show you one more image here. This is the 4-year presidential cycle,
Hmm.
and shows the overall back to 1949. That's the dash lines,
Okay.
and then the solid lines are this current presidential cycle that began in 21. Okay, so this is what you can visually see what typically happens during a 4-year presidential cycle.
So basically, year
Post-election,
one is the best year.
year one is actually year three is the best year.
Oh, year three. Okay. Oh, I
Year
see.
one is usually a good year also. So that's next year. Midterm is usually
Oh.
the worst year. That was the 22 cyclical bear market.
Hmm.
And then 23, you can see here,
Hmm.
if we just look at, let's look at the NASDAQ, the blue line. So the NASDAQ pulled way back in 22, took off in 23, and then in 24 just kept going higher. So it's outperforming the 75-year average
Hmm.
right now.
Got it.
So that that presumes then that we probably are going to continue into the end of the year.
Well, let's play with that a little bit because again, it could.
All signs
It,
point that way.
well, that's true, I guess. But what about reversion to the mean?
Yeah, well, at some point it will revert to the mean. And I actually want to talk about that, but do you want to talk about the PCE?
Yeah. Yeah, one of the things that I think is coming up Wednesday that could throw a wrinkle in all of this, and this is really a combination of things that are building. I'm going to say this as a comment, but it's really meant more as a question for you. I think what's transpired over the last couple of weeks is first, the Federal Reserve is getting comfortable with higher for longer. B, they're going to significantly slow rate cuts. C, I think they're taking the terminal rate from something with a 3 handle to something with a 4 handle. So the cost of capital is going up higher than expected. Second, something you and I have talked about for a while now is we see some dirty data perhaps in the inflation reading. And we get one of those readings Wednesday. I was shocked by what I read for my daily financial news this morning. PCE, both headline and core, are expected to go up. PCE last headline was last reported at 2.1, is expected to go to 2.3. Core, which is proven to be wicked sticky, is expected to go from 2.7 to 2.8. So on Wednesday, it comes out 5:30 a.m. Wednesday morning. We could get second whiff of inflation and higher for longer, and no more. I mean, that could kill a December rate cut right there.
It could. I don't think it will,
Okay.
but it could. And I think everyone will be up in arms next week about inflation.
Kind of
And
my point.
I talked about this months ago
You did.
that November everyone was going to be saying inflation's back, and the
Exactly.
mainstream media and CNBC and the talking heads will all be talking about inflation coming back again.
Yeah. And I just think about that on a Wednesday before, I mean, because the market will be closed for 4 days.
It's a half day on Friday.
Oh, is it a half day Friday? Oh, thank you for
Yeah,
that. I
it
thought,
closes at 1 Eastern on
okay.
Friday.
So that makes me feel a little better. But for most people, it'll be a 4 day weekend.
Right.
I mean, what I guess I'd ask you a question. Do you think CNBC and Bloomberg and all of these others will be running with the inflation is back narrative? Because I got to imagine that would not be good for stocks.
I think they will. Yeah, I think they will run with that narrative, and it could affect stocks in the short term.
Correct.
I
Yes.
don't think it's going to affect what we're looking at here. I
So you
think we're
think
still,
it's to summarize that, you think it's a 2, 3, 4 day, I don't know, event, and then we get back on trend. Is that what you're saying?
I think, I think it's good that there's a 4 day weekend. I think the
Cool,
market,
Mark. Cool
you
off.
might see, you might see the effects on Friday with that half a day.
Okay. All right.
And then the market will think about it over the weekend and
Mhm.
realize that it's just temporary, that inflation
Yeah.
is going to drop off a cliff next year.
Yeah. But the reality of this is you specifically, have been calling November is that time, and even has said the market will flip out and say inflation is coming. But if we fast forward 3 or 4 months, there's a very good chance that CPI is under 2%.
Right. Yeah, it probably
Okay.
will be. Probably will be.
Okay.
And it will trend down next month in December.
Hmm.
So, which I think is before the Fed meeting.
Might be. I have to check. I didn't look this
Yeah,
morning.
I haven't looked either. But but regardless, the Fed knows this too. It's not like I have some proprietary
Yeah,
chart.
I'm not so concerned about the Fed. I'm curious about the news cycle, the market. I think again, I'm just a guy pretending to talk about this stuff, but I think a lot of retail buyers are kind of acting like FOMO's back. But if they
Mm-hmm.
get one of those negative headlines and they see a rollover, they could exit just as fast.
BTFD, baby.
Buyer's dip. That's why you wear the hat. Damn it. I should have known better. You set me up.
Buy the frickin' dip.
All right. All right. I got you.
By the way, I was thinking about this morning because I knew, we're coming on and I knew you always wear a hat. So I wanted to pull my hat out.
For
But my YouTube channel, that's basically what I do. I teach people how to find good stocks, where to buy them, how many shares to buy, and then how to set
protect
stop
yourself with stops. Yeah, exactly.
and move
That's
your
the
stops
missing
up.
wrinkle.
But the whole point is you find good stocks that are going up, but you don't buy them when they're up. You buy them when they
Mhm.
pull back.
No,
BTFB.
I love what you're doing. Uh, and really is that missing piece. You're also helping people see where the stop should be. So you're really
Right.
protecting the downside.
Right. Exactly. That's
Yeah,
right.
I love what you're
So
doing.
let me get to the bad news and that reversion to the mean question that you had. I've got one more chart here though, also from Stock Traders Almanac, and this is regarding small caps. So I think one of the most asked question that I get is, are small caps ready to rally?
Hmm.
Are they ready to go? So here's the data. This is back to 1950 for the S&P. Russell 2000 started in 1979, so that's where that one goes back to. But if you look at both sides, you can see that both of them go up into the end of the year. So this is the Tuesday before Thanksgiving, next Tuesday, until the second day of the new year. And the Russell outperforms the S&P. The S&P goes up too,
Hmm.
but the Russell outperforms.
Now, just to be clear, when you say the second day of the year, that's the second trading day of the year.
Yes, second trading day of the year.
Got
Correct.
it. Okay. Okay.
That's when the Santa Claus rally ends. Second
Mhm.
trading day of the year. All right. So historically, the Russell 2000, this is the sweet spot. You look at the chart down below, you can see again, December, small caps were right here at the beginning of December right now. So could rally next week, first week of December. Then it pulls back and then it takes off the middle of December right through March, basically. So this is the sweet spot for small caps. This
Got it.
is this is this is where to be. So let me close this down and let me show you something else. Just to just to look at both sides. I was looking at there's a couple of things that I watch when the market gets a little frothy.
Hmm.
One is the rotation, what I call sustainability rotation. And this is our very first conversation. I talked about this in December of 21 when the market was hitting all-time highs and retail traders thought it was going to the moon.
Yeah.
And I said, be careful because next year might be a down year. And this is the reason I said that.
Got
So
it.
this looks at things like discretionary versus staples, the NASDAQ versus the S&P, technology versus the S&P, growth versus value. All right, so if the market's going up like it has been, you can see right here, this is the S&P. Discretionary has actually done really well.
Hmm.
So this is the one component that is still very positive. But the NASDAQ versus the S&P is trending down and actually started moving down again.
Hmm.
Technology versus the S&P, growth versus value. This is the big one. So if the market's going higher, growth is usually leading.
Right.
And if that starts to change, if the market keeps going higher, in fact, if we get that end of year rally, which I think we will, and this doesn't change, this doesn't start going up, then I would be really concerned about next year.
So again, this is back to your theory that 2025 might be a repeat of 2022.
Right, exactly. So what happens, and this is a way to look under the covers to see what the big traders on Wall Street are doing that the retail traders don't know about. If they are positioning for a cyclical bear market next year, a downtrend, then they are going to start transitioning their portfolio now. They're not going to
Right.
wait till next year. And they can't wait. They can't do everything at once. It takes
Right.
them months
Yep.
to reallocate all their
Reposition.
funds.
Yeah. Yep. Yep.
So this is a way to see some of that ahead of time. So
Yeah. And
we're
again,
going to keep.
folks, Dan has a playlist on my channel. I think it's just called Dan. You can go back to video number 1, video number 2, and see his calls from late 2021. They are very, very good and accurate. You should go back and watch and see that he's talking about this again.
Yeah, the only one that's different is the discretionary versus staples. This in
Right.
21, this one was going down too, just like all the other ones.
Yeah, you went 4 for 4, not 3 for 4.
Right, right. So I mean that might be one positive. And Tesla is the one that's holding that one up.
Well, I was just going to say that's likely one stock.
Tesla and Amazon are the two biggest holdings. It's like they're like 50% of the whole sector. Tesla has just been a monster since the election.
Yep. Yeah, it's up at like 340 or something.
Good yeah. So is Netflix. Netflix is just keeps moving higher.
Okay.
But anyway, keep this in mind. We'll continue to watch this. Like I said, if we get an end of year rally and these don't start moving up, in fact, if they keep moving down, then that will confirm for me by the end of December, I think we'll know. That will confirm for me that probably mid-January or so, sometime early in 25.
Right. So right now your call is a bear market in stocks in 2025.
I am not necessarily going to say it that way.
Okay. What would you say?
My call is if the rotation continues out of growth and into value, then it will be a cyclical bear market, not a secular bear, a cyclical bear. That's short term. That's a short-term bear.
Right. So you're not ready to call it, but that's what you're watching.
Yeah, I'm not ready to call it yet. And I probably won't be until end of December, 1st of January, something like that.
Okay. All right.
But then we'll keep watching. We'll keep watching these things. Now, the other thing that was really interesting that I wanted to check out was the put call ratio. This is sentiment. So the put call ratio, essentially, when people buy puts, that means they're bearish. When people buy calls, that means they're bullish.
Yep.
There's a ratio of puts to calls. So if there are more puts than calls, then this line goes up. So you can see the blue line right there.
Oh, interesting.
We can actually make this a little bigger, I think. All right. So it's a little counterintuitive because when the line goes up, that means everyone's buying puts. So it's a put to call. So puts is the numerator, calls is the denominator. Got it. When the line is dropping, that means everyone's buying calls. Everyone's bullish. So this period right here was post-COVID. Everybody, in fact, everybody was staying home and learning how to trade on Robinhood on their phones. And everybody was buying calls all the way down here to the end of 21. And there's right there is December of 21. This is another reason why I called that back then. And then in 22, we had the cyclical bear market for this whole period. And it actually officially ended in October of 23 right there. But people didn't trust it and they kept buying puts. All right, then we hit the top up here. And now ever since basically October of last year is the current rally. Ever since October of last year, this has been going down. Okay, so if it's going down, that means everyone's buying calls. Right. Everybody's bullish. Okay. Now, what I did was I put 2 Fibonacci levels. This is an ideal situation to use Fibonacci. So Fibonacci, you can go research that and look it up, but it's something that's found in nature everywhere. There's certain numbers called the golden ratio, certain numbers associated with it. And in trading, and most platforms will allow you to do this, there are key levels that this will draw automatically for you. So I use this top over here, and I use this bottom right here, and I just drew that and it automatically put in the lines for me. So these gray lines are the major top and bottom. Okay. Got it. Then I put a second one in because there's another top right here, right? Which is equivalent to this top over here. So I drew that one down to the bottom also. Okay. So what I like to do is to draw 2 or 3 Fibonacci levels and see where the lines intersect. And notice where these two, the green and the gray lines right here, intersect. Yep. right there. Now, this is where we are heading into the beginning of December.
Hmm.
You can see there's not much more to go to hit these lines,
Mm-hmm.
and that's just about January
Okay.
25. All right. Now, again, this does not predict that's going to happen. This doesn't mean it will happen.
Mm-hmm.
This is just, historical data. It's just something to be aware of
Mm-hmm.
for risk management. It could just keep on dropping, and we could have a massive bull market all the way into next year, and this gets all the way back down here again.
Maybe.
I don't think it will. There's also two more lines that are close to intersecting right down here too. But this was the one to watch, and these are the
Okay.
things we'll watch both of these things over the next month
Nice.
to see how they do. So if the market does start to roll over, if that inflation number next week causes everyone to get jittery and people start selling and buying puts, it's going to send this line higher,
Right.
right? So which will be just above that, but I think sometime next year that's probably going to happen.
Love it.
This is the S&P down here, so you can kind of correlate where the bottom is here and where the high was there.
Got it.
And this here is the high up here. I drew the vertical line, so that was the bottom right there.
Nice.
All right. And then the VIX is another thing. Right now it's below 17.
Mm-hmm.
Usually when the markets are falling, like in 22, it's above 20
Yep.
through this period. Right now it's below 17. So that's another thing to watch. If that starts ticking up also, then that's another indicator for
Love it.
next year. So those are just some of the things that I've been seeing. Things to watch. I think we are still going to have that rally. I agree with you that the PCE number is probably going to cause some consternation.
Consternation. That's funny. Same word.
Yeah.
Consternation.
And actually, let me look at CPI because this is what we talked about before. So
Mm-hmm.
this was the number last month. There's a little bit bigger gap coming up
Yep.
in the next one.
Yep.
The next one will be over here. And that little bit bigger gap probably is not enough to send. This is CPI, not PCE.
Correct.
The PCE, for me, it's still based on this previous one back here,
Right. Correct.
right? Because we're still in this month.
That's why it's going to be a bigger jump. Yep.
That's why it'll be a bigger jump because that one was very small. This one's a
Correct.
little bit bigger. So I think the number in December will
Mm-hmm.
probably be flat. The PCE number will probably be flat, maybe
Mm-hmm.
even come down slightly. But both of them probably will come in roughly about where they are right now.
Yeah. And
So
and then to your point,
and
it gets
then
easier.
look at this. Look what happens. Bang, 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 bang.
Yeah.
So when these start dropping off, inflation is going to fall like a rock and be below 2%.
There you go.
And the Fed knows
Yep.
this. The Fed
Yeah.
knows
No,
that.
the Fed knows this clearly.
That's why I think they'll still cut in December.
Okay.
But that'll be the last one. I don't think they will cut again until something significant happens
What
next
do you
year.
think the chances? I have two questions for you as we wrap this up, and you can stop sharing if you want. We don't. These will just be questions for you.
Okay.
So first question is, let's assume they do the December cut. They whack 100 basis points off of from where we were.
Mm-hmm.
What do you think? What do you think the chances are we have zero rate cuts in 25?
I think there is zero chance.
Okay. All right. What do you think the next after December? Again, we're assuming they do one more cut. What do you think the chances are the next move is higher?
Um, I think the chances are zero.
I love that. We so I'll answer again. I didn't plan to do this, but since you said zero to both of them, let me give my kind of thoughts. I think the chances that they're, again, we're assuming they cut in December. I think the chances are that they have zero cuts in 2025 is certainly non-zero. I would put it at something like 20%, 15 to 20%. I'll take 20. So 1 in 5.
So you think it's a very low likelihood they will have no cuts?
Yeah, but again,
No.
non-zero.
non-zero.
Yeah. So
Right.
I think again,
I
four out
think
of
they
five
will.
times.
I think they will have cuts.
Yeah. No, I'm saying there's a 4 out of 5 chance they will have cut in
Right.
25.
Yeah.
But
I think the first quarter, no cuts.
got it.
The second quarter, probably no cuts, but it'll begin to start looking like they need to cut more,
Oh, it's
and
interesting.
they might actually cut in the second quarter.
Oh,
And
so it's funny you brought that up because that's exactly my setup for 25. I am really, really nervous about the first half. I
mhm.
think the first half might be ugly. And if it is, they cut. But I'm kind of, I got to admit, I'm kind of once bitten, twice shy. I've been bitten twice with the U.S. economy. I've called a recession twice and been wrong. So I'm giving myself a 1 in 5 chance that we just have we just grow out of this thing. There's no recession. We just grow out. And if that's the
I think that's
case,
very possible.
yeah. So if that's the case and Q1, Q2 is not as bad as I think there's a chance the Fed just sits on their hands. That's how I
Mhm.
get to 20%.
Yeah, I mean that's certainly possible.
Okay.
I don't think the economy can go the whole year with that
Okay.
though.
That's no, we totally agree. I'm just
And if what you say happens, then the stock market's not going to go down either. We're not going to
correct.
have a bear. We won't have a bear market next year.
Correct. And then the chance,
And by the way, everyone is talking about a banner year next year,
yeah. No, I mean,
up
yeah,
nine
the
percent.
talking heads. Yeah,
Yep.
it's
The
crazy.
forecast is up 9%. By the way, in my newsletter this week, I put a link to Real Investment Advice, which is a free newsletter that I get.
Hmm.
But I put the link in there, and they talk specifically about that topic, about why Wall Street and analyst firms, why they have to say the market's going up,
Yeah, of course. They
why
need
they
to
will
attract capital.
never say that it's going down, that they
Yeah.
always will say that it's going up.
Yeah. That's why I love our
And
conversation.
they
We
even
don't have,
give examples of, in 2008, before the financial crisis, that the year before, analysts said the market was going 9%.
yeah.
In
Yeah.
2000, before the
Yeah.
2001 crash, they said the market was going up 9%. They
Love,
always do that. They have to do that. That's
no,
how they get
love it.
paid to do that.
Exactly.
So,
So let's answer the last question and then we'll wrap this up. The last question was again, assuming a December cut, 100 basis points off, what are my thoughts about the next move being up? And for me, it's not zero, but it's a very low kind of 5% possibility. So, um, and again, it's kind of that setup.
if the move was up, that implies inflation is coming back,
Correct.
right?
Exactly.
Which we just showed that it won't be.
Well, again, I think what you and I have shown is mathematically the first half will show inflation coming down. There
Dramatically.
is no,
Dramatically.
I agree. I
Mm-hmm.
agree. But there is a chance that there are tariffs and a lot of things that get thrown in, maybe like a sledgehammer versus scalpel. Again, I don't think this is likely. I think tariffs and all these other things will be a scalpel, but I've
So
got to look at the
let's talk about
oh,
that for a second,
sure.
because I've heard this conversation about tariffs before.
Mm-hmm.
So first off, Trump takes office near the
The
end of
20th of
January,
January. Yep.
right? The first quarter, he will do some executive orders,
Yeah. Day one stuff.
which will take effect right away.
Yep.
But there's a lot of other things that he won't be able to get done right away.
Mm-hmm.
He needs to get everything that he wants done in the first 2 years. So he's going to have to
Correct.
move fast, but it's
Mm-hmm.
probably not going to be the first quarter. All right.
Certainly won't feel the economic impact in the first quarter.
Right. And on tariffs, it depends on how he does tariffs.
I'm going to suspect they are executive orders like Biden used.
They probably will be executive orders.
Mm-hmm.
Interestingly, Biden never canceled Trump's tariffs when he took office.
I didn't know that.
Yeah, he never did. I went back and looked historically back when Japan was shipping cars over here, real cheap
Mm-hmm.
cars,
Yep.
and we put tariffs on Japan. You know what happened? Japan built factories in the United States and hired American workers.
There you go. That's what he wants.
That's what happens with tariffs.
Yep.
Does not mean the price of everything goes up.
Well, so again, this is this is pure economics. So again, in the short term, with tariffs, they will be more expensive because you can't build a factory in a day.
Right.
Right. So again, this is why it's a 5% possibility. It's not likely. It's very unlikely. But there is a chance that there's a 60, 70, 80, 100% tariff on everything China ships us. And in the short term, if that happened, it would be inflationary without question. However, if you fast forward a year, 2 years, we will make more stuff here. But again, that's why I have a 5% possibility that the next move is up.
So I saw an interview with what's the guy on Shark Tank, Mr.
Mr.
Wonderful.
Wonderful. Yeah, Mr. Wonderful.
Um, he said they asked him about tariffs and whether it was going to increase prices, and he said no. He said basically the same thing. I mean, they'll come over here and start building factories here, and more Americans will be working.
Yeah, not a bad thing.
But then he said, I think it's great to have tariffs against China. I've done business in China for 20 years. China cheats and steals, and they will do everything they can to get around it. He said,
I saw that interview. Yeah.
Yeah, and he said, they're talking about 60% tariffs. I want 400% tariffs. I want to use it as a weapon against China. So I think what is going to happen is the threat of tariffs will be there, but not the actual implementation of tariffs. So the way it will probably be laid out is we are going to charge 400% tariff, and you've got 12 months or 6 months, wherever it is. You've got X amount of time to start making our products more competitive.
Yeah. Yeah.
So it's going to be a threat, not the actual implementation, which won't raise prices.
Yeah. And hence my 5%.
Right.
Again, I think what will happen with tariffs is twofold. One is it will lead to fairer trade, to your point.
Right. Yes, that's right.
I think it's the threat. That said, the other thing that will happen is I think there will be some things declared as national security that will no longer be made overseas. And those things will become more expensive, and they should, right? Why do we want to rely on people that hate us?
Right. Exactly.
So, again, I do believe that tariffs will be used as a scalpel, not a sledgehammer. I think
it'll be used as a threat.
Correct.
The threat of tariffs, not the actual implementation of tariffs. But the other thing that will happen, and this will happen right away, is cutting a lot of exactly, and also the pipeline, opening up the pipeline again.
Oh, XL pipeline.
So all the energy policies will happen immediately, and that goes to everything.
Correct.
Everything that we make here in this country, everything that people driving to work, everything that you touch, lower energy lowers the cost of those things.
Love it.
That is something that will happen right away.
Well, again, I love the fact that we've been doing this for years and will likely be doing it for years to come. Tune in every Sunday, folks. This typically goes live at 5 p.m. Pacific, so you can set your watch to it. Dan, you're amazing, buddy. Take care.
And don't forget to join my YouTube channel. And I am teaching. The beginning of it, I talk about what the market did that day, just an overview of what the market looks like, and some extra things that I've noticed. But then I start teaching about how to find good stocks, buy good stocks, where to buy them, wait for the pullback,
protect the downside. Yep.
Buy them, put stops in, and then raise your stops until eventually. Right now, we've got a portfolio potential of 14. I think we have 12 right now stocks in it.
Nice.
And the goal is to have all 14 of those in there, and all of the stops above our buy price, so they're all making a profit. That's the goal.
You're amazing, buddy. Keep it up. Keep it up. You're doing amazing work.
It's fun.
Thank you, buddy. Take care.
Bye. All right. Have a good weekend.